We are now at the lowest point of trade.
Today, for the first hour, in fact, for the first 2 hours or so, traders try to believe that, okay, this is just another one of those dips which can be bought.
Hi everybody. From October 2021, the Nifty has fallen around 18% from its highs. The banking sector has fallen 23%, IT sector 33%, pharma 21%, metal 35%. In fact, as per the research of one of the financial firm, portfolios of retail investors are down by an average of 32%. Fall in Nasdaq, Dow Jones, the rise in crude oil prices, all-time inflation across the world, and the Russia-Ukraine war are sucking out big money from the Indian markets, leaving most retail traders in huge losses. What if I tell you that there is a way that if you had followed, you would have been out of the market in December 2021 itself, before anything even had started? Today, I will share a technique with you that will not only give you an early signal to leave a sector or even a market, but will also give you early signs of when to enter stocks, sector or markets. Also, there is a free special gift for all the viewers at the end of the video. So let's get started and learn sector rotation my way. This is a monthly chart of Nifty where each candle represents 1 month. And we are analyzing it from January 2020 to understand the concept and its efficiency. As you can see on the chart, before January 2020, for 4 months, the Nifty was in green and every candle's close was above the previous month's open, showing a clear uptrend. But in January 2020, the Nifty's close was below the open of December 2019. And when such a scenario happens to any stock, index or market, when a given instrument who was in a clear uptrend but the current month close is below the last month's open, which I mind you was a green candle, then it is a clear red flag for all the market participants. In 2020, the market continued its fall till the end of March. Now, as per the rule, we will make a fresh entry into the market or stock when the close of current green candle is above the opening of last red candle. In Nifty's case, we need a closing above 11,387.35. In August, Nifty gave a close of 11,387.50, which was just 0.15 above the opening of the last red candle. Though it is very close, but as per the rule, the trend has changed and we can start making fresh entries in the market, or we can be more aggressive in adding our long positions if we already have some. In September, Nifty made a red candle, but it didn't give a close below the opening of the last green candle, which means our trend is intact and we can continue adding longs. Fast forward to January 2021, where again Nifty made a red candle, but the close was not below the previous green candle's open. Similarly, in March and April 2021, it made red candles, but again it didn't give a close below the opening of the last green candle, and the bullish trend continued. But something special happened on November 2021. The trend was bullish, the candle of October was green, and in November, Nifty gave a close below the open of October candle, and that was a red flag that shouldn't be avoided. The next step is to understand what should we keep in mind when this happens. Start booking profit, don't make fresh positions, and wait for the price to come and test 20 exponential moving average of that particular time frame on which you are working. Once it does that and gives a close above the opening of the last red candle, only then you can consider that the correction is over and the financial instrument is ready for its new move. From November to now, there is no single instance when Nifty gave a green candle whose close was above the open of the previous red candle. Plus, it took 7 months to test 20 EMA. Now, whenever it gives a close above the opening of the last red candle, that is a month when we will consider that correction is over and Nifty is ready for its new run. Now, just imagine how much of your time, money and emotions would have been saved if you knew this before. And it works on all the indices and stocks, plus at all the time frames. If you are a swing trader, you should track stocks and indices within a weekly time frame. If you are a swing trader, you should track stocks and indices within a weekly time frame. If you are a positional trader, then monthly time frame is good for you. And if you are someone who likes to make investments, then 3-month time frame is best for you. And as I promised you that you will get a gift at the end of the video, so I am sharing a Google Sheet with you in which all the major indices in India have been covered from weekly to 3-month time frame. It will update automatically at the end of every week and you will find a link to it in the description. So let's quickly understand how to read this sheet. The trend in any instrument can be figured out in two ways. Either only consider the previous candle or only consider the current candle. There are pros and cons to both ways. If you make your decision based on the last candle, that means you have to wait for the entire candle to form, and hence you might miss out on some quick moves. But on the other side, the advantage of this method is that your decisions would be based on the concrete data, so chances of you getting trapped in your trades would be less. Whereas if you make decisions based on the current candle, which is not fully formed yet, you might enjoy some quick pullbacks or breakouts, but chances of you getting trapped is high. So I have made a sheet here where the trend has been shown considering both the past and the current candle. This gives us the edge of being more accurate with our decisions. All you have to do is to open this sheet every Sunday and check which sectors have the maximum number of greens in front of it, and then keep a close eye on the stocks of that sectors. At the time of uploading this video, the top 3 sectors were auto, consumption and FMCG. And as you all know, stocks of these sectors have started to outperform the market. And this is the way you can figure out sector rotation my way, which will help you to make wealthy in a more relaxed way. This is all from my side. Thank you for watching. I'll see you in the next one.